This PMS says that it uses a disciplined momentum investing strategy to beat the market. But when I looked into the numbers, it tells a completely different story. The PMS we are going to discuss today is the Wright Research Alpha Fund. So before even getting into the analysis, let's first understand what this PMS does by going to their website. So Wright Research Alpha Fund PMS is a concentrated portfolio of 10 trending and high momentum stocks. So 10 trending and high momentum stocks. So whenever you see a concentrated portfolio, it should be a bit of an alarming bell because it's of high risk, right? Because you're concentrating your money in just 10 stocks, right? 10 trending and high momentum stocks, that also comes with high risk. So that should be a bit of an alarming bell before when you look at a very concentrated portfolio of any sort. And also they are charging a fee of 1.5%, that is the flat fee. And you also have a performance-based fee, which is 15% over high watermark. So two things here, right? One is the top 10 concentrated portfolio, and another one is the high fees here, right? 1.5% flat fees and also the performance-based fees of 15%. Now that we understand what this PMS is doing, let's get on to the analysis. So here I've already chosen a momentum index, although the suggested benchmark is small cap. The correlation between these two are quite high, about 0.85. But the reason I'm choosing this momentum index is because it's a concentrated trending momentum is what the portfolio objective is saying, right? So that's why I picked a momentum 30. Again, this benchmark is also concentrated, right? So you're picking the top 30 highly performing stocks here. So let's get on with the famous benchmarking analysis, right? So when I compared this PMS with its benchmark over the last 2 years, right, a short time frame that we are talking about, it hasn't performed well, right? So it's charging a high expense ratio, right, of 1.5%. And over the last 2 years, the benchmark has beaten this PMS, right? Mind that there have been times, right, a few months or so where it did outperform the benchmark, but overall, it hasn't justified its fees. And over the last 3 years since 2023, right? I think October or August is when it started. It has beaten the benchmark, the Nifty 200 Momentum 30 in 2 years, but in 2025 it has brutally underperformed by 25%. Now that we understand how well this fund has done compared to its benchmark, I also mentioned the risk of having a very concentrated portfolio is the maximum drawdown here, right? So you can see a maximum drawdown of 40%, which is quite high. And also, even for the benchmark itself, a maximum drawdown of 32%, right? It's again, since both of these are a bit concentrated, you have a very high maximum drawdown here. The maximum drawdown is basically the maximum amount that you can lose by investing in this fund, right? You can also confirm this analysis by going into the rolling drawdowns here, right? So you can again see a maximum drawdown of 40% in the case of Wright Research Alpha Fund. Now that we have seen the performance of this fund compared to its benchmark, we have also seen the risks of this fund. I will also quickly show you what do I mean by the concentration, right? So I have again picked the Alpha Fund, the Wright Research Alpha Fund, as well as the Nifty 200 Momentum 30 ETF, right? The benchmark that we saw earlier. The concentration risk mainly comes from the limited amount of stocks that it has, right? So for example, in the Momentum Nifty 200 Momentum 30 ETF's case, we have about 32 stocks, right? And when you go into the top 10 stocks of the Momentum 30 ETF, you can see the top 10 stocks sums up to about 50%. So about 50% of the allocation just goes to the top 10 stocks. So think about the Wright Research, right? We don't have the holdings for Wright Research because it's just the returns that we have. All your money, that it's just allocated to just 10 stocks, right? So which is like of greater risk, and you also have the firm risk as well, right? Like there could be like few companies that can go up or down, right? So you have a very concentrated portfolio that comes with a very high risk as well. And more importantly, the momentum ETF, right? If you're looking for something like the momentum strategy, right? This is charging about a 0.3% compared to Wright Research, which is charging not only a flat fee of 1.5%, but also a performance fee on top of that if it performs well, right? So that is something to keep in mind. Just to summarize this entire video, what we have seen is the PMS, the Wright Research Alpha Fund. There are also a lot of PMS from Wright Research which you can look into by going to their website. This fund, when compared to its benchmark, it hasn't performed well over the last 2 years. It has a very high drawdown, maximum drawdown compared to the benchmark. Since it's also like a very concentrated portfolio of 10 stocks, it also comes with a very high risk, and it charges an expense ratio of 1.5%. And also on top of that, you also have a performance based fee. So combination of flat fee and performance based fee makes it makes this entire fee like on the higher end, right? So before I kind of end this video, right, if you are someone who's interested in analyzing PMS or AIF's portfolio, we have built an exceptional tool called Returns Analyzer, which we recently saw here, right, in the analysis, where you can upload the returns of any PMS or AIFs. And more importantly, you can combine the PMS with your client's portfolio. For example, I've created a client portfolio here with 3 funds, right? Like a large cap fund, mid cap fund, and small cap fund. Let's say you as an advisor, or even you as a retail client, right, who wants to analyze or understand your portfolio, you can click this portfolio and combine it with, let's say, we recently looked at the Wright Research Alpha Fund, right? You can combine them into one portfolio and see the after effect of having the PMS portfolio in your portfolio, right? I'll just save this here in your dashboard. So you can just save it like this: 75% to the client portfolio and 25% to the alpha PMS portfolio here. So once I save it, you can quickly go and analyze the original portfolio, and also the after you combine the PMS portfolio, you can take it to asset comparer, and also you can take it to the returns analyzer. I think that sums up the entire video. Thanks a lot for watching. I will see you next time with another interesting video. Thanks a lot.